traders, welcome to our weekend analysis for December 1st. Right now it's actually after midnight, so we are at December 2nd already. Another busy day for me, so that's why I got to do this very late. Nevertheless, let's get into it. So what happened this week? Let's take a look at that. What happened? You know what? Let me put this on here. Okay, so what happened this week? As you can tell from beginning of the week, we didn't really have much saying. At the weekly analysis video I put on this Monday, I was saying that although we had few fundamental data, but this week is most likely to be another geopolitical and political sentimental week, and that was exactly the case. Let's talk about few important currencies. First of all, for British pound, it was a one-way street to the upside because the market continued to buy into the rumor that EU and Britain is going to reach the settlement fee at $50 billion pound or euro. And that, of course, is a good news. It's a good news actually for both sides. People argue it's only a good news for UK, for British pound. If EU and UK can reach a certain kind of deal, it's going to be beneficial for both parties. The reason is because, first of all, for UK, of course, it's going to be beneficial. They will be much more stable. There will be less uncertainty heading into 2018. And then you will have more business investment. A lot of corporations, banks can finally understand what's about to happen in the future, right? At least you have a sort of a blueprint. Why is it good for EU? Is because somebody has to pay up the fee. Originally, the reason they were stuck in this kind of divorce fee, and EU is not greedy, right? They're not asking the money for nothing. The reason is because there are some financial obligations that had been signed by UK when they were part of the European nations. Then suddenly, all of a sudden, last year they vote to leave. Now you have a big amount of money that somebody has to pay. Now, if UK does not pay, then the bill has to be put in by other European nations. Most likely will be the richest nations, such as Germany and France. Obviously, Germany and France are not happy about it, right? They're not going to pay for that. So that's why EU basically keep pushing UK to pay up more money. And now it seems like if they are really going to reach this deal, it's going to be very beneficial for both parties. So that's why it's not only a good news for UK, it's also good news for Euro. For that being said, I do have to remind you it's only a rumor. Okay, nothing had confirmed yet. It's most likely that EU and UK will have a certain agreement by the end of this year. They really don't want to, cross 2017 without any sort of agreement, but it's just a rumor. Means that it might be 50 billion, it might be 25. And what's that going to affect the market? Of course, it's very simple, it's straightforward. Right now, the market expects a $50 billion. If the result is 50 billion, then you will have a buy rumor sell fact. The fact, let's take a look at a chart so you'll have a more understanding. Look at pound CAD today. Pound CAD today, Canadian dollar has a very strong sentiment today because of the labor market data. But just look at this whole 8-hour trend, you'll see that it is a continuation of uptrend regardless of what happened, right? We're still within the channel. And what's going to happen is if UK really pays 50 billion, you will have another downside movement, I think. And the reason is because it's basically very typical buy rumor sell fact effect. However, if UK and EU, the final settlement fee is more than 50 billion, then of course you're going to see a lot of strength into British pound. On the contrary, if the final settlement fee is less than $50 billion, let's say it's like 40 billion, 30 or 25, you're going to see a huge drop in British pound because market will be very, very disappointed and panic over this kind of result. But nevertheless, what's driving the British pound right now? Completely geopolitical base, nothing to do with the fundamentals. I know for time to time, you will see some fundamental data have a slight push to the market, especially if you are a day trader, if you're a scalper. But if you're a swing trader, you're really looking at a bigger perspective, then pay more attention to the geopolitical pictures. And that's really what's happening this week for British pound. Another notable event, of course, for US dollar, we're supposed to vote for the tax reform bill. And of course, it got delayed again, push back. That's supposed to be a bad news. However, take a look at dollar. Dollar for this week, beginning of November 27, it's actually a pretty decent uptrend. I know it's only a very short trend compared to before, but it is a bigger perspective. So at this bottom, this is really the beginning of the week. So for this week, if you just look at the weekly base, it had been a good uptrend. Why? Because as I mentioned before, the actual voting is not going to provide too much sentiment, right? It's the comment by the Republicans, because we know that Senate can only afford 2 votes to lose. Okay, they need 50 votes to pass. So upon when we are approaching this voting, a lot of news media will start interview Republican Party members, senators, to see their positions. And that's what's going to drive the market. And that's what happened this week. You have different Republican senators say that they will vote for the bill. And the reason, of course, you don't want a member who already going to vote, they say they're going to vote it. That's not going to do anything, right? You want a member who probably opposed to the bill, who probably is in the swing position, and this week they stand it out, say, yeah, you know what, I'm going to vote for it. And most notably this week is John McCain. So John McCain, if you remember, he was one of the senators to vote against to repeal the Obamacare. And that's why the Obama healthcare hadn't been able to repealed by the Republican for this whole year. And John McCain was obviously very, very famous, very significant members, political figures. So he came out this week, says that he will vote for the tax reform bill. Obviously, that's a huge boost for the Republican Party, for the possibility that we're really going to pass the tax reform bill, and hence that's a very good sentiment for US dollar. That's just the beginning of the week. And then what happened this week, this Friday, is then Michael Flynn, don't know if you guys remember, was the he was advisor for Trump campaign during the elections. Then obviously he got arrested, or he got into a trial by the FBI because of the Russian Gate relation. Friday, today, he came out and agree with FBI that he is going to testify against Donald Trump. Now that's another political drama. If he is going to against Donald Trump, and that's why today you have this red candle. Look at that. This is really what happened today. Now obviously, it hasn't had too much effect yet, because you have to understand the impact of, because even if Michael Flynn testify against Trump, let's be honest, Trump is not like an angel figure, right? So for any more people to attack him, it's not going to bring him down. You need a concrete evidence. So unless Michael Flynn has sort of evidence, like a recording tape, things like that, otherwise it's just, he say, she say. If that's the case, it really wouldn't do too much for Trump or his party. And I think if that's the case, so again, I don't know what's the detail, but unless there's evidence, otherwise this rumor, I think, will be very easy to be digested, and the market will pay attention back to the tax reform bill, which means US dollar, if the bill does pass, then we will have another strength and buying into US dollar. That's what happened this week, the most notable 2 things. And of course, you have Powell speaks for the first time. He is going to be the new Federal Reserve chair. He didn't really provide too much surprise. People trying to say his comment is a little bit dovish. I don't really think so. I think he didn't really, there's no surprise. So I don't know it's too early to say, basically. So not a big event. Same as RBNZ, Financial Stability Report, Bank of Canada, Polar speak. All these it could be important, but it turned out not, didn't really provide anything. RBNZ government Spencer didn't really provide any new things. Now, another notable thing, of course, is the OPEC meeting. And as we mentioned, this is going to affect the oil market. Now, the result is that they did agree to extend the oil output curve for another 9 months. This was as expected. However, they did have a clause saying that they are going to review everything in 3 months. So, still a lot of uncertainty. And the reason is because just take the oil market first, right? We really have a continuity of downtrend, but at $57, that's really where you hit the double bottom, and then it goes up again. So I think, generally speaking, in a micro perspective, of course, it's a good news for the oil market. The doubt over this whole thing is because not all nations has enough money to burn, like Saudi Arabia. You have to understand, when you artificially reduce the output, you have to sacrifice some of the economics that you generate from oil drilling. And for Saudi Arabia, of course, they have enough money and cash to do that. But for a country like Russia is really the biggest hurdle, basically, because Russia is not doing well economically speaking. And they really rely on these natural resources. So yes, Russia is on board, but they really want to know what's going to happen. How long is this whole thing's going to run? So that's a different story. And as for now, of course, if they go ahead for the oil cut deal extension, it's going to be good for the oil market. Hence, of course, it's going to be good for Canadian dollar. And that's precisely the reason, if you look at CAD today, it's a huge buying into Canadian dollar, same as dollar CAD. It's a huge buying into Canadian dollar today. Okay, so that's what's happening, or what had happened this week. Crude oil inventory, of course, another draw, another good news for Canada. And look at that, preliminary GDP for US is 3.3%. It's actually a very, very good number for the US economy, but the market is really not paying attention to that, right? Right now, the market only focuses on two things. One is the tax reform. Second is the Russian gate for US dollar. And then you have a little bit data like Aussie and New Zealand. Look at the business confidence for New Zealand. It's minus 39. This is even worse than the last time. So it's really, really getting bad. Okay, and I'm saying before, as long as the Liberal Party for New Zealand, right, continue to be the government, which they are, and RBNZ continue to be dovish with the loosened monetary policy, New Zealand dollar is one of the weakest currency. Okay, because the reason for New Zealand dollar to be weakened is directly from the central bank and the government. So this is really, that's the whole driving force of the country, right? So as long as the central bank and the government continue to be dovish, continue to be bearish, then you will expect to see New Zealand dollar go to the downside. And that's why I'm very, very bearish about New Zealand dollar. In fact, I had a lot of short position in the New Zealand dollar, but I'll do that in the trade update. If you're interested to see that, by the way, it's free, but I do want you to sign up in my email list. So I'm going to send that to you because it's unlisted on YouTube. So if you are interested to know the individual trade, completely transparent, what I'm taking right now, what I'm looking at, you can look at my other videos, okay? And other than that, Thursday, the Euro CPI and core CPI, obviously not a whole lot of good picture, but look at that, 0.9%, it's really the same as last time. 1.5% is still better than last time. So it's Euro, again, very neutral currency, and it had been a neutral currency when we enter this week. It's still a neutral currency as we're speaking right now. Other than that, Friday today, the most important data is the Canadian labor market. We did have a large boost, expect is 10,000, and we have 79,000. Unemployment rate also dropped. But you have to understand the employment change, you always want to look at the full-time and part-time. And obviously, people want a full-time employment to be higher because full-time employment is more stable for a country's economy. For this time, this is completed from part-time. But in terms of Canada, you have to also look into a scope of each country. It's a very normal pattern. For the labor market out of Canada, it's always a very good number accompanied by an okay number. If I expand it, you'll see right? You have something like 45 and then 10, 22, 10, 35, and today you have 79. So it's always like a wild range. But all in all, it just shows you that among the G7 country, Canada is still doing very, very well. And that along with the existing fundamental reason. First, Bank of Canada hiked 2 times already in 2017. They are expecting to hike more in 2018. Now that alone is a very bullish reason to buy Canadian dollar. OPEC just passed the oil curve extension. That's another micro reason for the oil market to boost. Hence, it's going to help the Canadian dollar. That's the second reason to buy Canadian dollar. Now, third is that you have a major data, GDP, employment, inflation. Now, GDP and employment both are looking pretty well right now. So that's third reason for Canadian dollar to go up. And that's one of the reasons I'm also very bullish in Canadian dollar. So that's pretty much what had happened for this week. And just to recap, 8 major currency for US dollar right now this week is exactly, as I said, a geopolitical driven week. And I think that's going to be the same thing for next week. If you want to trade US dollar, although we have a non-farm payroll next week, I'm going to go down to next week so you'll see. So next week, Friday, we does have non-farm payroll, but it's not as important. It's important, but it's not as important as a tax reform bill and the Russian gate investigation. So these two will be your main catalysts. And then, of course, non-farm payroll, what we are looking at is the average hour earnings. So we really want to see something, expectation 0.3%, obviously better than the previous time. This is what is going to boost the US dollar. For the actual data, it's not that important anymore. Everything is, you have a negative number because of hurricane. But aside from that, the job employment change number is not that important. People are not paying attention anymore because it's a very good number. Same as unemployment rate, it's low enough. It's really almost in the equilibrium. So the average earning will be what people are looking at, pay attention to. But of course, it's not going to be as important as the tax reform bill and the Russian gate. So that's for US dollar. For euro, I don't have anything this week. We don't have anything next week actually either. So euro is again a neutral currency. It's only going to go up or down depending on where you pair it up with. For Canadian dollar, next week you have a Bank of Canada meeting on Wednesday right here. Right now the market expectation is unchanged. And it does look like it's going to be unchanged because according to what the Bank of Canada official, they came out many times before and they're very cautious, right? So although this week the labor market data is great, the GDP is good, it's just a one-time, data. It's a monthly data, right? It's not enough for them to hike the third time right away because they really want to see how the rate hike has impacted the economy, especially the real estate market, and how the consumer reaction to it. So I don't know, of course, but it's really unwise and risky if they go ahead and hike. And right now, the probability is very, very low. I think it's only about 25%. So for this year, nobody is expect another rate hike for 2017. For 2018, however, they do expect a rate hike for March. Now, the March rate hike probability right now is over 90%. So 2018 is a very high chance, but really, the end of the year, I don't think Bank of Canada is going to hike again. You can still, pay attention to it. We never know what's going to happen, right? You never know what the central bank is really going to do, but I don't think they're going to do too much. However, regardless, because of what happened in the oil market, and actual data from Canada, I think is one of the strongest currencies. I think it's actually the strongest currency right now, the most stable one, because US dollar will really depend on the geopolitical events, and it's hard to guess. British pound completely depend on the Brexit negotiation and the rumors. Again, it's very hard to guess, very hard to predict. With Canadian dollar, it's very stable. The bullish strength directly came from the fundamental data and oil market. So everything has been cleared out. So that's why I like about Canadian dollar. And the fourth currency, when talking about the British pound, as I just mentioned, really depend on the Brexit. And remember, for people who are new to this, you have to be careful. Don't just jump in buying the result, because when the result comes out, you have to compare that with the expectation of the market and the reaction of the trader, right? That's where the momentum, and that's where you make money. It's not about the result. So right now the rumor is $50 billion fund. That means if they does settle for 50 billion, most likely you will have the sale effect into British pound, because buy rumor sell effect. If they reach something more than 50 billion, of course, it's going to be very positive for British pound. If they reach something less than 50 billion, it's going to be very negative for British pound. So that's something to watch out for. Other than that, the other currency, Aussie and New Zealand. For New Zealand dollar, first of all, I still think it's very negative. I really completely disregard every of the fundamental data for New Zealand, right? So for me, nothing's gonna change my view for New Zealand dollar unless the Liberal government suddenly publish a policy or policies that are very pro-business, or RBNZ governance suddenly become very hawkish. Now we don't have that yet, and I don't see any reason for them to do that. For Australian dollar, it's a neutral currency. A neutral comes from two reasons, right? First is the Chinese economy. Regardless of the ups and downs, Chinese economy is still doing very well among the major countries. So that's a boost for Australian. Another thing, of course, is the commodity market. As you can see, copper, iron ore, oil market, gold, all these are still relatively stable. That's another boost for Australian dollar. The downside for Australian dollar is the central bank. The central bank of Australia, RBA, continue to be kind of dovish. They're wait and see. They're not eager to hike the interest rate. We do have their meeting and cash rate on Monday. Again, I don't expect anything. So this is really not a big event for me. They're probably going to come out and say the same thing they said before. So Australian dollar is still a neutral currency. Now, other than that, what we have left is Japanese yen and Swiss franc. Now, these two safe haven currency obviously has gained a lot of momentum in the past few weeks. And a very simple reason to understand that, as long as you see a word or there's a lot of chaotic news, but of course not all news are the same, but as long as you see news that has effect to the US, to Europe, or to the world, like North Korea launching missile, that's a big boost for Japanese yen, Swiss franc, and gold. And right now, Russian gate, that's also the big boost, as I just show you here, right? Immediately you have a boost into Japanese yen. That's why you have this red candle today. And of course, if you want to see Japanese yen, Swiss franc, of course you can also take a look at gold. So gold will be a very good baseline as well, because gold really react completely to the risk events. So that's why you will have exactly the same thing. Look at this uptrend today. That's really the opposite of dollar yen, and the reason is because gold is going up and yen is going up and dollar is going down. Okay, so that's pretty much what I'm looking at, what had happened this week, and what I'm looking at next week. So next week, really, nothing really new had changed from my swing state perspective. For scalping or for day trade, a good event to trade. Honestly, a good event to trade will probably be the GDP of Australian, but only if you have something that's very, very surprise. Right? The reason is because Australian dollar is very neutral. So if you have something very positive, of course you can buy it, and if you have something very negative, you can sell it, right? Because right now the pre-existing sentiment for Australian dollar is a neutral. So that's why this catalyst will be able to push it or drop it. Of course, Bank of Canada, unless they hike, otherwise I don't think it's going to have too much effect. And Thursday, Draghi is going to speak. Don't really think too much effect. Friday, non-farm payroll, it's good if you have a deviation, but you will have to see what happened to the US dollar first. Now, why do I say that? Is because if you have a tax reform bill that had passed, then even if you have a negative non-farm payroll, it's not going to be a sustained reaction. People might sell US dollar, but they're going to buy it back, right? Because the tax reform, it's a much stronger sentiment and much stronger reason for US dollar to go up. On the contrary, if you have a tax reform bill that does not pass, or maybe you have a Russian gate, Michael Flynn testified against Trump. We have a new update on that. Something very, very negative for US dollar geopolitically speaking. Then even if you have a good non-farm payroll, you have a good average hourly earning, I wouldn't buy US dollar, because this sentiment is not going to be strong enough to boost the US dollar up if we already have a negative geopolitical event. You have to understand, the only reason people are looking at this is they want to know if Federal Reserve is going to hike interest rate. And right now they are going to hike, right? That's the probability for December. So that means this doesn't really bring too much emphasis, too much importance for this perspective. So if you want to trade US dollar or look at US dollar, how US dollar is going to go, really, I think tax reform and Russian gate investigation, these two are going to be the main catalyst. Okay. Other than that, I don't have much here right now. I'll be back Monday for another analysis, a quick analysis, just to see what happened in weekend, and maybe have come up new ideas to trade. Okay. And once again, if you want to see my individual trades, go to my other video where I talk about my trade update Monday to Friday. All right, thanks for watching, guys. If you have any question, please do let me know. Thanks.